Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, January the 26th, 2010. Well, a very similar looking candle to yesterday's candle, and that's a fairly small body candle with a rather large shadow on the top. Today's candle has a small shadow on the bottom, but the more significant features are the small body and the large shadow on the top. Now, the small body represents a small amount of bullish or bearish progress. In this case, it's bearish progress. The previous day it was bullish progress. So we have had some sort of a change in the amount of progress that either side are making. And today the bears have made the progress, although not significant enough to actually take out an area of support down around this 1090 level. What's quite significant to this market, though, is the shadow on top of the candle, and today's candle and the previous day's candle, and that represents downside price rejection as the market was interacting with the top of the cloud or the Kumo. The market tried to trade up above that cloud, and then there was price rejection coming in. The sellers came in and sold this market off, so that could be fairly significant. The top of the cloud there is holding as an area of resistance for the market. That coincides with this roughly 1106 to 1100 region. That 1100 area is a round number, and we would expect that would be a natural area of resistance for this market. The close of today's candle is below the previous day's close, so that's telling us that the sellers are keen, and the sellers have also closed the market down near the lows, so they're showing some commitment, and they were in control when the market closed. So the buyers attempted to take control of this market as they traded up towards the highs, and the sellers came in and took control away from the buyers, and the buyers lost commitment throughout the trading day. That doesn't really look too good for a change of trend to the upside, considering that the buyers really didn't show any intensity on the day, and we have a solid area of resistance now. A confluence of probably three factors with this price rejection from around this area previously, the 1100 region and the top of the cloud. It doesn't look too good for a breakout above that region, although anything's possible, but it's less probable that will happen. And a test of these lows is probably very important for the market down around this 1090 region. If those lows are taken out, then there's potential for the market to trade down to roughly around the 1080 level. Although the market is trading with the cloud, and anywhere within the cloud can act as an area of support, so we need to be aware of that. The market, because it's trading down or within the cloud, tells us that the market is neutral. It's neither positive nor negative, so we have a neutral market, and the market is trading down below the Kijun-sen and Tenkan-sen, so in the short to medium term time frames the market has turned negative. We haven't had a crossover of the Kijun-sen above the Tenkan-sen yet. That is still a possibility. If that happens, it will be a weak sell signal, but that hasn't happened yet. So the lows of these current candles. Oh, by the way, this pattern that we've got here is a Japanese candlestick potential reversal pattern, and that's where we have either two candles together or two candles within the same proximity having equal lows and a previous strong downtrend. There is potential for this to be a reversal pattern. It's called a tweezer's bottom, and we need confirmation of that pattern before we can say that pattern is complete. So confirmation would be a higher high and a higher low, so especially with this 1100 to 1106 region being taken out. So the lows here become very important for this market if the market is going to trade down beyond this support that the market's trading in. And the highs are even more important here around this region for a potential reversal of the trend to the upside.